Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The markets were a little bit mixed overnight after the release of the US CPI number or inflation. According to the latest data from the US Bureau of Labor Statistics released on Wednesday, consumer inflation in the US measure by the Consumer Price Index, or CPI, increased by 0.4% in April, with the core inflation, excluding food and energy prices, also up by 0.4%. However, on a year-over-year basis, the headline printed a tick lower in April from 5% to 4.9%, while the core CPI slowed down from 5.6% in March to 5.5%. From the release, the Fed fund rate's still around 5 to 5.25% and is now above the annual CPI. The eyes now look to this Thursday's PPI number and also seeing how the market will finish at the end of the week, as many now are calling for a pause in the next rate hiking campaign by the Fed at its meeting in June. However, April's 4.9% annual increase is still significantly above the Federal Reserve's 2% target. In other news, the recent debate over the rising of the US debate ceiling gave little progress after President Joe Biden met with House Speaker Kevin McCarthy and other top congressional leaders to discuss the issues on Tuesday. From the close, both sides are scheduled to meet again on Friday. So looking at the technicals, we can see that the Australian dollar took another stab at that top side around 67.80.90 and now pressures this level. In light of the pattern though, I still feel there's maybe a little bit of divergence coming through here and therefore not overly bullish at these highs or even above 68 cents, and therefore could see a snap to the downside and look towards his 60-day moving average, which is somewhere around 67 cents. Do note the close beneath there would give further scope towards a region of 65.90. The dollar index, which measures the greenback strength against a basket of 6 major currencies, is pretty much unchanged as it trades around 102.2030. Meanwhile, the euro was a little bit whipsawed, but still holding to a negative bias, and therefore, after taking a brief challenge to the downside on Wednesday, the market may see another visit as the RSI is under the midway point and therefore looks towards the key level of 109.25. But from the broader aspect, I am viewing that the fact that we could see a weaker play from a break of 109 and then looks towards 107.25 area and reassess. Any upside attempts looks to the resistance around 109.90 with the key level at 110.60.75. So from the given information overnight from the inflationary data, the market has found a bit of a weaker play and yen coming back into strength, that is. And the market slipped as the dollar tumbles towards the region now seen as a support level of 133.45 to 55, with the key support base holding beneath at 132.60.65. In light of the pattern, the market has buckled slightly, so we could see a little bit of a weaker play, but I feel that opportunity still will come for the bulls and therefore see the markets rebound off its base and look towards that top side area, anywhere from 135 to 136. All eyes on Super Thursday as the market now awaits the Bank of England with a 25 or maybe even a surprise 50 basis point rate hike, due to the inflation remaining still above 10%. From that, we could see a mixed price action and high volatility emerging, with the resistance capping around at the moment at 126.55 and the support key level, that is, of 125.10.15. Let's see how the market unfolds. In light of the pattern, it does feel that we could see another up test, but after the last 3 attempts, the market is a little bit hesitant as it gets closer towards 126.55. Wrapping up with gold and oil, well, the market took a challenge back to that top side and rejected that area around 2038. And the technicals are still buckled and therefore could see another test down, with the initial support seen minor at 2026 and then lower down towards 2012 or maybe towards 1984 to 96 as an initial objective with any advancement, still capping around 2038. And finishing up with oil, well, the market was a little bit hesitant in taking the challenge towards that key level seen around $74.1030 and a little bit weaker into the play as profit taking may be emerging as we have travelled from 65 all the way up towards 73. So a big jump and about $8 in strength. Keep an eye on the technicals, they're not broken down, so still feel that the top side the call is holding, that is at 74.1030, and the support seen somewhere around 72.45 on the day. Well, that wraps it for the morning. Thank you very much for joining me. As always, look after the intraday report, and I hope you enjoy the great start to the day.